So has that come up on the screen? Yeah, I think so. Okay, so yeah, so Tom, that's an interesting question, and there's a few things I would like to touch on with this question. So I'll go through a couple of things, and it will give you a few ideas. And if you have any questions that lead from that, then let me know. So let's try and tackle this question. So basically, you're saying that the sim underscore strategies that are in the system indicators, you would like to be able to write one of those yourself. Fair enough. And then you would want to use that for looking at MD underscore trough for entries and MD underscore peak for exits. That's fine. We can. I'll show you how to approach it, and then hopefully you'll be able to do that part on your own. Yeah, and then you're talking about different buying and selling levels. So is that something that can be accomplished with EdgeRaterPro? Absolutely. And what are the steps needed to accomplish this? Is a very good question. It's quite the question to start with. But anyway, there's a couple of things I wanted to say about answering that question before I answered the question. And the first is that in the entries and exits tab in the program, all right, that's where you, as you know, that's where you do your, you drop in your entry scripts and your exit scripts, and you can generate signals for entries and exits. And so there's a basic thing that you can do before you even get to the sim underscore scripts. And this will help me kind of explain what the sim underscore scripts are. So first of all, if you just take a look at system scans, let me choose a, yes, this is okay. This symbol list is okay. That's the list of CBOE weeklies. So let me just give you an example. So there's a bunch of scripts under the scans tab here on the right-hand side. So let's take a simple example across above the upper Bollinger Band. Okay, we can drop that in over here. And then we can run that against this entire list of symbols. So let me just do that. And however much data I have in this list, which I can always find out by clicking on the edit list and then look at the data update options, and I can see that I've got 10 years when it fetches data. And I can see that currently there's data up to 4/23/2021. So that's how much data is being scanned for this particular entry, AUBB. So every one of these signals is across above the upper Bollinger Band. You'll notice though when I did that, it didn't do anything with the exits tab. So you would have to put in a different scan for exits. So one of the exits that you could choose is, just as an example, this is not a great idea, but let's say below lower Bollinger Band. So across below the lower Bollinger Band, and if I run that script, and it's going to generate a bunch of exit signals. So now I've got both entries and exits. All right, but I had to do that in two separate steps. I had to create the entries first, and then I had to create the exits. The idea with the sim underscore scripts is that it's one script which generates both entries and exits. So that's only really that's the only, I say the only, that's a special thing with those scripts. And it's not the name sim underscore that makes it do anything special. It's what's inside the script. So you can actually put what's in those scripts into any named script, and it would work in exactly the same way. So let's take a look at that. First of all, we'll take a look at the cross above the upper Bollinger Band script in here, AUBB. And then if I click on edit, I will be able to see what's contained in this script. It's a very simple script, and it's basically saying it's doing this cross detection for a close above Bollinger Bands. N and P are the parameters, and then looking for the upper output of that script. And it's assigning that to the event line. So it's quite a simple script. And it's simple because the Bollinger Band part of this is handled by this separate Bollinger Band script. So all we're saying here is we're trying to look for a cross of close and whatever this second script is. So it's fairly straightforward. Now let's take a look at one of the sim scripts and we'll see how that differs. Now first of all, what I'll do is I'll just clear the signals from the exits and I'll clear the signals from the entries. And if I search in here for Control F and then look for sim underscore, and I can see that there is only 4 of those types of scripts in the system. And if I choose something like, say, let's look at the sim 220 EMA upside breakout, just as an example. So now you'll notice the script is in this selector here, but in the exit side, BLBB is here. I can actually remove that just to clarify that this script is going to generate both entries and exits on its own. And I'll just run that. Okay, so we'll go ahead and process the entire symbol list for all of the dates. And when it's finished, we should see that it has generated the entries and the exits in one go. So here's all the entry signals, and here are all the exit signals. So it did what it was supposed to do. So really, the sim underscore script is a way of simplifying the operation. Sometimes you might want to actually have your entries and exits in 2 separate scripts because it's a little more flexible. You can put one entry in, for instance, and then play around with different exits by dragging them into the exit tab. Whereas to do it with the sim underscore script, you would have to go in and change the code in the sim underscore script. So let's take a look at what's inside the sim underscore script. I hope I'm still broadcasting. I haven't really checked. Okay, so let's go ahead and take a look at that. So I've clicked on sim underscore and I'm going to open the script. Now this is looks a little bit more involved, but really because it's calculating a lot of the things inside the script. But let's take it in sections. So the first section here is a bunch of calculations, basically to generate pricing information and various lines of information here. But the thing that makes this special is down here under the heading trade simulation, where it says set attribute, and then it's setting a long entry event and a long exit event, both within this one script. And so whenever the program runs a script like this, it will say, it will look for those attributes on any of those lines, and it will then, if there's a long entry event attribute and a long entry price, then it will generate a signal on that date and for that price, and it will do the same for the exit. So if you didn't have the trade simulation part in here, you would just have to have an event in here that would generate either the entry or the exit alone. But I have found while going and creating various templates that sometimes it's just nicer to have everything in one script. So you could choose, when you're generating your script, you could choose to do it in 2 separate parts, and first of all think about your entries and write an entry script, and then go and think about the exits and write an exit script. Or you could go the whole way and put everything in one script in one go. It's a little bit more, it might take more time to do it this way, and it might actually be better to go and generate the entry first and then the exit, and then kind of put them all into one script if you wanted to do it that way. It's just a suggestion here. This looks complicated just because there's quite a lot going on here, and it's not really spaced out neatly. But it's when you get into it, it's reasonably straightforward. Okay, in scripting, as you probably have found out, each line represents essentially an array of data, and that could be used just internally in the program, or it could be plotted on a chart. In this case, the line has got this no render attribute, which means it's just really for being used in the program, and it won't be plotted on a chart. If you were to put it into, if you were to drop this script onto a chart, it wouldn't plot the EMA val. Okay. So as an example of what I mean there, let's go to, well, before I do that, let's just, once you're looking at the entries and the exits, you can just double click on any of those, we'll call them signals, they are entry signals, and you'll get a little pop-up chart with, and if you click on the show annotations, it will actually point to the date of the signal that you clicked on. So, so I'm not sure how familiar you are with the entries and exits, but I just wanted to highlight the fact that this happens because as you're developing a script, this is something very useful to make sure that your script is picking out the things that you think it's picking out, and this will be very useful because oftentimes when you're writing a script, there may be a little nuance that you forgot, and when you come back and look at the signals, it's not quite picking out what you thought it was picking out. So this is always very useful to use this in conjunction with the chart, and to just click on. What you can do is just kind of pin this to the top, and then just come through and scroll down through this list of signals, and the little yellow highlight will pick out the bar that the script has been designed to pick out. The other indicators that are on here are not related to this script at all, because the chart is actually displaying other indicators. It's just been whatever the last indicator set was that you were looking at, that's what's displayed on here. If you wanted to get this back to a very basic chart, you can click on the single chart layout, and that takes off all of the indicators, makes it very clean. And then you can turn back on the little annotations, and as you come down through the list of signals here, it's going to update with those things. Now, if you're doing something like trying to detect a 220 EMA upside breakout, then the indicators that you'd have on the chart would obviously have to be relevant to that. Yeah, so when I'm developing a script, I'll put indicators on the chart that are related to what I'm trying to script around. So in the case of the 220 EMA breakout, what you'd be interested in, and let's just confirm this, we can put this off to the side here, and we'll look at the script itself. 220 EMA breakout. Okay, we're dealing with a 20 period EMA, so you might want to have a 20 period EMA on your chart. So you can just come into chart scripts here, and you can say put on moving average or EMA, and I'll just do a search for EMA. Let's drag that over there, and that is now, I'll just change the period there to be 20. Okay, so I now have a 20 period exponential moving average on the chart, and the entry of a 220 EMA, this 220 EMA system is, it's not a cross. A lot of people get confused that it's a cross, that they think it's a cross between a 2 period moving average and a 20 period moving average, but it's not. It's trying to detect when there are two clear bars above the 20 period moving average, and then if that occurs, then the entry is the following bar on a cross higher than the high of those two bars. So that here's what I mean. So you've got your 20 period moving average here, and this bar here does actually touch intraday. It comes down through the 20-period moving average, so that's not counted. So the next bar that's clearly above the 20-period is there. The next bar is the green one here. And then the following bar is your entry bar, because that is when it crossed the high of those two bars over here. And so as you're testing a script, you want to make sure that you click on a few random cases, is what I normally do, to just verify visually that what you're expecting to see is what you're actually seeing. So you're not going to be surprised by a signal that you're not expecting. So they all look valid to me, and I can feel confident then that the script is picking out the right thing. Okay, so that's kind of a brief talk on the entry and exit tab, and the difference between a regular script and a script where I've kind of tried to indicate that it's special and that it does a simulation. And the simulation is really that it's generating both the entry and the exit signal. And the other special part is that it's actually generating the price for the entry and the exit. Whereas a normal script, you don't have the ability to say what the price is for the entry or exit. It's just the date of the entry or exit. And then over in the trade simulation tab, you would then go ahead and say, now I've got my entry signal, might be a long signal, then you use the other settings in the trade simulation to say what price you're going to trade at after you've got that signal. So you might trade at the signal bar, the event bar, on the close is one option. The next bar after the event on the open. Well, there is an option for an X bar conditional, which if you click, you'll get to choose some other options. But normally you can play around with that. But normally when I'm writing scripts, I'm normally detecting either event bar on close or next bar on open. But the sims underscore scripts, you're able to specify a price that isn't the close price of the event bar necessarily, or the next bar open. Could be a price in the middle of the range, and that's really just up to you. But you do have to think about what you're actually testing in that case, because when you have a bar representing a whole day, which is open, high, low, and close, the points that you really know when they happened are the open price, and the close price. Yeah, the high and the low, you don't know what order they happened in or what time of day they happened, and so you really have to be careful when you're picking other prices. But sometimes you might want to pick another price just based on, it could be based on another indicator. So in which case that would have been, maybe it's the yeah, that doesn't really make sense. But you might pick a price that is, say, 10 cents above one of those levels. So 10 cents above the open, or 10 cents below the close, or something like that, or the previous day's open or close. You can do things like that. Okay. So anyway, going back to the entries and exits, something that most people are not aware of is that what you're looking at here is it's one view of the entries. But up in the top, there is a possibility of turning this from this grid view here into a list view. Okay, so when you click on list view, you've basically it's the same data, but it's arranged in a different way, and it's actually showing more of the data, because it's showing the values that you wrote out with your saying this is a long entry event and a long entry price. All of those columns are in each of these events. Each row is an event, and then it's got extra information in the event too, and quite a lot of it. So you can think of one row in this view as being representative of just one cell in this grid view. So there's obviously a lot more rows when you switch over to the list view. We can just scroll down to the bottom here. You can find there's 32,470 rows in here, and that's how many signals there are in this entry signals list. Okay, so then the other thing I should say is that you've got, if you have written a script using the sim underscore idea, where you're setting the event and the price inside the script, when you go over to trade simulation, you can then say use the scripted entry and exit rules. When you choose that, you can no longer choose your own entry and exit rules. It's taking them from the script, and you can't set them separately in the simulation. So just bear that in mind too. And then once you've got that set, you can see it's grayed out or disabled a lot of these settings over here, which is good, makes it much simpler. And then you can just play around with some portfolio rules and then just hit the run over here and you get your list of trades. Okay, so this is the 220 EMA. So basically what I've generated here is a trade list of 32,294 trades, and this is all based on the 220 system, based on the CBOE weeklies list, because that's what I ran the entries and exits against, and 10 years of that data. So for the past 10 years, you see 5/24/2011, so 10 years ago, there was a lot of red. Okay, and so you can scroll down and see the red entries are losing trades, and then the green entries are winning trades. But obviously you look at the trade summary to get your overall profit and loss, the overall number of winners, 35% winning trades, 64% losing trades, and that's pretty standard for a trend trading system, where you get fewer winning trades, but the winning trades, in theory, are bigger than the losing trades. And that's borne out in this case, because you can see the winning trade, the average winner was $798, and the average loser was $300. But there were more losing trades than winning trades. So you really have to go to look at the distribution of profit and loss. You can use your mouse to zoom in on that. And you can see that there were more trades. The majority of trades, winning or losing, the majority of trades were actually negative, between -1% and -2%. Okay, but they're to the left of that blue line, which is typical of a trend trading system. And then you can take a look at your daily equity here to see how that played out. You can look at either the daily equity itself, which is a snapshot of the things as they occurred, and then there's this daily index, which is trying to take all of the trades that occurred on any one day, averaging out the percent gain for that block of trades, and creating an index from that. So it's more of a let's see, the idea behind the average, the daily index, the idea behind the daily index is to smooth out the cases where you have a day that has maybe, maybe on one day you've got 100 trades because the market is all going in the same direction, and so it's generated 100 trades in one day, and then the next day you might not have a trade. You might not have another trade for a while, and then you might just have 1 or 2 trades coming in. So the average daily percent is designed to just smooth that out, so you don't have such a huge factor. If those 100 trades were winning trades that occurred on one day, then it would skew your results, or the daily equity chart, massively in your in the upside. And if they were losing trades, it would skew it massively downwards. But the daily index is designed to try and take out the effect of having multiple trades on one day. So I kind of like to look at the daily index as my main thing to look at. The daily equity is really, it's useful, but it's the way things happened, and what you're trying to get here is, because you're running something over such a large period of time, you're trying to get more of a statistical significance. So then I would even take this and run it through a Monte Carlo analysis, because that's going to give you more of a, it's going to randomize all the results and put them together in different ways and give you a much better sense of what is going on. Also a good idea to do a comparison symbol, so you know what's happened to major indexes over that time. And I would put SPY up here and click on Get Data for SPY, so then you get the gray line appearing. Don't know if you can see that on the video, but there is a gray line here. That is the value of SPY over that time. So you can see that well, recently we've just yeah, it's a very steep it's a very steep rise since last year, as we know. Okay, and the 220 EMA strategy has been working pretty well over that time as well. Okay, however, if you look at it over a 10-year period, there's times when it's been multiple periods when it has been underwater for a long time. And currently it's above water, but that's 10 years of many trades. So I think in general what you'll find is you're not going to find a strategy that works well over all stocks over all time frames. So that's something that you will find when you start to do more testing. Okay. Anyway, I hope that helped to answer that question. And I forgot to I had another thing lined up here. I should have done this. Okay, stand by. Get ready. Let's see if we can do this. Okay. Okay, so there we are. Right, thank you for that question, Tom. Very good question. A good one to kick off the live Q&A. I'm going to take a little break now,